Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. Thank you so much for joining us. My name is Jeremy. I am joined by Jerry Correia. And this is going to be a bit of a tale of the tape this week because at the beginning of the week, we had the crash in the markets. We want to break it down for everyone. What happened? What should we expect going forward? And also apply to that a little bit of old gold wisdom. How do gold bugs or gold traders handle these things? Were we emotional? Did it affect us? All of those things. And then as well, we want to talk about some incredible new usages for silver, and that's a good jumping off point to discuss the supply-demand fundamentals in that market to see if this market has legs. As well, stick with us because there have been some amazing charts in the gold and silver sphere and some incredible recommendations. So in terms of where the prices are headed from here, you're going to want to stick with us and find out what's happening on the gold and silver front for prices in the future. The number 18778 Silver, website guildhallwealth.com. If you want to hold physical gold and silver outside the financial system, this is the way to do it. You contact Guildhall. We're going to show you how to put physical gold in your hand. We're going to show you how to store it in a facility outside the banking system, no counterparty risk. And we're also going to show you how to do that within your RSP, TFSA, and your Lira, LIF, or RIF account. And by the way, if you have an RESP, if you've got a little one and you want to protect their future and give them an opportunity to gain on the benefits of gold and silver over the next 10 years, you want to use that number and go to the website and learn how to hold physical gold and silver in a registered account like an RESP. Jerry, you gave this to me just before the show from Ben Carlson on X, and I think he encapsulated everything of the week, which was the economy this week. He said Monday, the recession is on. Tuesday, the recession is canceled. Wednesday, no recession in the morning, but back on in the afternoon. And Thursday, the recession is canceled again until tomorrow or Monday. I think that put it into perspective. When Monday was occurring, we knew it was the yen trade unwinding. For those who listened to our show last week, it was something that we were discussing in depth about what was happening. But to me, one of the biggest things that was the issue is that there was a bunch of trading platforms that stopped people from being able to exit the markets. So, for example, I've got it here. We had Charles Schwab, TD Ameritrade, Vanguard, E-Trade, Fidelity. Their platforms were reportedly down. So people couldn't even exit the market. And it felt to me like they had lured people into the barn, closed the door, and lit it on fire. Mm-hmm. At least that's how it felt at the time. Now, thankfully, things are starting to move up, I suppose. If you're following someone like Vince Lanci, he's saying expects this thing to just basically move sideways and lower from here. Mm-hmm. What were your initial thoughts when you saw that these systems were down? Were you thinking CrowdStrike?
This is definitely one of the impacts and the negative impacts of digital trading, and and dealing with the psychology when you can't do something, especially with your money. If you cannot sell, you trigger someone psychologically. The fear is so immense. So what happened as the yen carry trade began to unwind because Japan shocked the world by going positive rates, raising interest rates in a time where everyone's cutting interest rates, they rose to protect the yen. Then the unwinding happened, and just a recap of how large this market is, it's absolutely massive. And this is from the Kobeissi letter. We're talking about $3.4 trillion in Japanese investors' net international investment worldwide. So this is the yen carry trade in total amounts to a whopping 20 trillion, or 505% of the Japanese GDP. This is Godzilla in finance. This is the zombie market in Japan. And as that was unwinding, major trading platforms, as you mentioned, were down, stopping people from selling their stocks and preventing the biggest market crash in history. Just as a recap, what happened on Black Monday, the Japan stock market suffered the worst loss in history. The Nikkei dropped by 13%, down 4,000 points. It surpassed the previous record set back in 1987 when it fell by 3,800 points. But during this time, as the panic was unwinding and people were trying to get back onto their trading platforms through Charles Schwab and a lot of TD Ameritrade, retail sold a massive, so the people sold a massive $1 billion worth of their shares. Just get me out. So I want to cut my losses. Just get me out of here.
Even though certain platforms were down, there was still a massive amount of selling.
Yes. According to Radar, JP Morgan says institutions bought the dip while retail panic sold aggressively. While people were dumping, the institutions bought over $14 billion worth of shares. You know, this was something massive. You know, just before this happened last week, Warren Buffett and his Berkshire Hathaway, the Oracle of Omaha, was dumping $2.3 billion worth of U.S. banks in a 6-day selling spree, giving us the indication that, wait a minute, he's going to cash here. What does he know? What's coming up here? Well, Black Monday, as we were off enjoying our civic holiday here in Canada, this massive debacle happened. To no surprise.
Do you think that for Warren Buffett, do you think that was signal or do you think it was coincidence?
Maybe a little bit of both, you know, but maybe he listened to JP Morgan last week when JP Morgan, in a note to the clients, advised people to stay defensive. And with equities backdrop looking problematic, the bank wrote, the bank's analysts closed the note, remember, by issuing their call to sell stocks and buy gold. That was JP Morgan. Maybe Warren Buffett perhaps took the advice from JP Morgan and sold the stocks. But there's a lot of back and forth, a lot of flip-flopping like what we're seeing this week. There's a recession on or off. It sounds to me like the whole transitory inflation and higher rates for longer, because it's an immense flip-flop. And the bigger flip-flop going forward, I think, you know, understanding that that JP Morgan says that this carry trade unwinding is not yet complete. I think it's around north of 50%. You said around 70%.
I saw a report yesterday. They were saying it's 70% plus done.
Yeah.
And the one you're saying is that it's 50%.
And now, as we're moving forward, the Bank of Japan, they're divided. They're totally mixed. You have the governor, Ueda. He initially was the one who signaled that the weak yen is a risk to the economy, that they need to hike interest rates. So he was in support of hiking. And then later on in the week, which is why we're seeing a reprieve and a resurgence back in the Nikkei and the markets, you find a little bit of stability coming from the deputy governor, Uchida, who later stated this week that rate hikes were not imminent due to the market turmoil, and they will not hike rates because of market turmoil and uncertainty. So I guess they'll never hike rates again because this market is totally uncertain. We don't know where this is going.
They're also the number one buyer of their own currency, which means they've completely socialized all of any losses in that market. And this is a problem as well. I was watching most of an interview with Rafi Farber. He was interviewing someone in Japan, and they were saying they just trust the government blindly there, that this is what they need to do and that they're doing the right thing, et cetera, et cetera. We think differently. We think along the lines of like a Gerald Celente, think for yourself. Don't blindly take the advice of what they're saying on TV and those things. You know, at the same time as all of this was happening, you know, it was great to see Egon von Greyerz out on X saying silver moving fast to 50. Silver is now starting the acceleration phase. That's something that Michael Oliver discusses very much, about the idea of momentum trading. And these momentum charts can show up a lot earlier than the actual technical charts. $50 should not take long, he says, to reach. but the pause there may be temporary. Gold should reach around 3,400 in this move on the way to much higher levels. Remember, it is all about wealth preservation. I couldn't agree more. In the next segment, we want to talk about what Jim Rickards has been discussing with regard to gold and what we saw this past week in the gold market. But in the meantime, if you are thinking about holding or owning physical gold and silver, we are the best place to go to. We will show you the different products available, why you might want to choose LBMA versus non-LBMA products, why go over this, why use this size versus that size, what products are going to be best for you. We're happy to discuss those things and make sure that you're making the best economic choice and for you and your family. And then, of course, we offer it within registered accounts, completely owned by you in the registered account. No counterparty risk. You can go to the vault and personally audit. It's been great to see a couple clients recently asking, hey, can I go and visit my product? Can I get a photo audit? These sorts of things. The answer is yes. We can arrange that for you. It's not snap your fingers, go tomorrow. There's protocols. It's security. But we can absolutely get that physical gold in your hand for you to personally verify. The number, 18778-SILVER. The website, guildhallwealth.com. You know, I know there was a little bit of movement in the gold and silver market. I did put out on X on Monday, Jerry, just showing that even with the pullbacks in gold and silver, we're still actually very, very comfortably above the 200-day moving average, which it would be great to see gold and silver back down to the 200-day moving average. It's a great place to load the boat. But even through this market machinations, we're still comfortably above that. And actually, silver only really gave back to where we were back in May, which I thought was also interesting. And we're already back up $1 off of that. Gold really hung around the 2,400, did pull down below that, back above it. That was very, very strong. So that was great to see. And, you know, just having the ability to protect your overall wealth with something like that, that doesn't seem to have the exact same volatility that we saw on the stock market this week. And it's also been undervalued. You know, gold and silver have been doing their job fighting inflation, and yet they're still extremely undervalued when we use ratios and compare them to things like the debt, compare them to housing valuations, compare them to the stock market valuations. I saw someone this week mentioning the Dow Gold ratio. Jerry, I think it was in the Colbasi letter. They were talking about the Dow Gold ratio.
Nice.
I thought, oh, that's interesting. Something we talk about a lot, that, you know, at a peak of a gold market, you're probably going to see a 1-to-1 ratio. Back in 2011, when gold peaked, we hit a 4-to-1 ratio against the Dow Jones Industrial Index. And right now we're in about probably 17-to-1. So it's great to see that gold has been protecting wealth over the years, up over 500%. Silver's up over 370. I think it's up over 400% in Canadian dollars in the last 20 years. Definitely keeping up with inflation, but still undervalued. I mean, that is fantastic. So let's talk about some wisdom from Jim Rickards. He, in the past, has talked about what's called an ICE 9 event. This thing, in other words, the financial system freezing up and your inability to actually exit from it, especially when you have all these passive investments. It's easy to get into ETFs and funds and whatnot. But everyone arrives at the party on their own, at their own time. Some like to come early, some like to be fashionably late. But when the fire alarm goes off, like it did on Monday, everyone's running for the exits all at the same time. And then you had all these platforms that were down. Isn't that Jim Rickards' ICE 9 event that he was talking about?
Something like it. It's a very, very same thing. It's short circuiting, and that's the issue that Jim Rickards pointed out, and he calls it an ICE 9 event. When everyone tries to get out at the same time, they short the circuits. You can't get out. The issue with digital banking and the need to undigitize your wealth in I believe is the case for gold. And this is why we stress undigitizing your wealth more than ever before, I think. And this is why with Guildhall, you can protect your wealth entirely outside of a failing currency system outside of a digital banking system. And we saw this in full display on Monday, where it was a concerted effort of banks locking people out. And it's a huge lesson, follow the money, because in an era where we're in right now, where it's very tough to judge where we are with manipulated data from the inflation numbers to job numbers being revised up and down, all we have to do now, what we must do is follow these trends, follow what Warren Buffett did. He was dumping. New SEC filings today show that BlackRock CEO Larry Fink is just dumping over $25 million worth of BlackRock shares. These elite people, they know what's coming, and they're offloading their shares at a historic pace. This is another trend that we have to follow. But I think the biggest trend is just follow the yellow brick road and follow the old wisdom, the old gold wisdom from Jim Rickards this week. Sort of summarize what we saw with all that volatility, what to do, why is gold even reacting, why is silver reacting on the downside? Well,
did they throw the baby out with the bathwater?
Did they? We were wondering, and you and I were both calm. We were trying to buy these dips, and this is what we did. People bought the dips. And Jim Rickards summarized, for those new to gold, here is the deal. In a stock market meltdown, gold goes down due to selling by weak hands who need cash for margin calls. The strong hands take a beat, wait for the bottom. Then they jump in with both feet because they know it's way up from there. And I found that to bring an amazing, calm, and that's what gold and silver does. It gives you calm understanding. You have access to your gold and silver. You will never get trapped in a market in gold and silver. It was, I think it was a comment from Kim.com this week in response to the trading platforms getting locked down. Major trading platforms are down and trying to stop people from selling stocks and preventing the biggest market crash in history. You are trapped. In the gold and silver market, the reason why gold and silver are insurance policies for central banks who acquire gold is the number one reason is for liquidity. You're never trapped. You will always have that gold. There will always be a secondary, even a third market for the gold market, even the silver market being globally number 7 market cap. You're never stuck. You're always in control. You're never cornered nor trapped, Jeremy.
Yeah, I mean, listen, it's a far end of a spectrum, but there's also the commodity side of it where you can trade with it, right? It can be accepted for trade. People aren't going to accept your stocks for trade, that sort of thing. So, there's that added monetary aspect of gold and silver. Obviously, silver has both monetary and industrial aspects to it, which is something we're going to get into a little later in the show. But I think the whole idea of insulating yourself from these sort of market volatility, the fact that we're at this place where any little thing can trigger it. You're seeing all of these signals out into the market, whether it's Warren Buffett, whether it's insiders who work at these companies dumping stocks at a record pace. The question is, I see it as signal. Why are they doing this? Why are we not paying attention to it? Mm-hmm. I was having a conversation with Paul. I think it was this morning. We were just saying, what is the motivation for the mainstream business networks to tell you the truth? You already gaslit everywhere and you appreciate that.
That's right.
And when I say appreciate it, I mean you understand that it's happening and can now read through it. But why would they tell you the truth? They're a corporatocracy. They are the mouthpiece of the corporatocracy. And yes, maybe by rights, if JP Morgan makes a lot of money, maybe their clients will make a lot of money. Are you a client of JP Morgan as the majority of people watching that show? No, they're sending signals so they can do exactly what they did this week. Mm-hmm. Okay? It's not a conspiracy theory.
No.
The market dumped. They bought it all on the dip, pushing it back up, making billions. In the meantime, going back to the quote earlier, there's a recession. Oh, it's been canceled. No, there's a recession, but it'll be later this afternoon. And we're just following back and forth on the news. Today we hate Kamala. Now we love Kamala. You know, tomorrow, what are we going to hate? Tomorrow, what are we going to love? They tell us, we agree.
Yeah.
Is that really going to help you make money in this market? You know, I saw someone say, oh, you know, just be long in the market. History says,
ride it out,
da, da, da. And you think, well, but how overvalued is the market right now?
Exactly.
You know, I'm not saying there isn't winners, but how overvalued is it? You can see it. You can see the PE ratios. How overvalued is the stock market? Now, here's another question. Again, I'm not a financial advisor. I'm not an economist, just someone who's been in the gold market understanding value and money for 15 years. How many Apple Watches are you going to go out and buy this Christmas? How many Nike shoes are you going to go out and buy this Christmas, right? How many Caterpillar trucks or, you know, machines is your company running out to buy this year?
Yeah, not that type of spending anymore.
So what is it going to take to drive those stock markets to ultimate highs? And great, AI, amazing. Yes, there's beautiful technologies out there that are going to do fantastic. But how much can you afford? Mm-hmm. How much of it is your company affording right now?
Right.
Where's the business coming from? And you just wonder, how does the stock market double from here? What kind of productivity is going to drive it to double from here when most of these companies are now paying more interest on their loans than they have in the last decade?
Yeah.
Where's it come from?
Oh,
it doesn't make any sense. Why are they telling? What is it that they're pushing on you? Mm-hmm. They pushed fake meat. They've pushed crypto. They've put like everything they push on you goes up for a little while. You get in the trade late. It goes down. I'm not speaking from experience. I don't participate. When do you start thinking for yourself and saying, okay, how do I make this easier? You know, gold and silver have just been a steady rise. Don't worry about the ups and downs of the market because every day there's something new.
Yeah.
Right?
Exactly.
Today it rained. Tomorrow it'll be sunny. That's the season. But we know fall's coming. We know
Exactly.
winter's coming. And the market just keeps marching forward. Mm-hmm. That's my thoughts.
I think you're absolutely right. It just breeds complacency with the flip-flopping of the media. And in the stats show it, investors are at the most complacent level probably in history. They're going to sit and relax, hands in the pocket, no recession. How can the market continue to go up when we have bubbles, the price-to-earning ratios are continuing at highs? Well, it can't continue because one of the very sources of the bubbles and fueling for the bubbles was this yen carry trade. Gold rolls from black swan to black swan. We don't know what the next black swan is, but we see the black swan right now. It's unwinding. Where they got their trillions to fund this bubble over here, that stock market over there, it's coming to an end. And with the flip-flopping Federal Reserve, they are totally trapped. And this is where the gold market comes in because this is going to be the next one that we have to keep an eye on. Kobeissi letter really finalizes on the Fed's complacency. They're in between a rock and a hard place. The Fed is in a lose-lose situation. If the Fed cuts rates aggressively right now because everyone's begging for an emergency cut potentially next week, it could be a 50-pointer, 75-pointer, a slash. If they cut aggressively now, markets tank further and they risk a resurgence of inflation. Cutting U.S. rates will not only make the yen carry trade unwinding worse, likely sending the NASDAQ into bear market territory. 2, if the Fed doesn't cut rates right now, recession fears will continue to mount. No rate cuts mean more worry about rising unemployment, which is now at a 3-year high. The Fed must pick between market and inflation instability or a potential recession. And even if they pick the right former, we may still end up in a recession. It's going to be a bumpy road ahead. And this is why you need to give us a call because during any bear markets, going back through history, the gold prices rose significantly, especially in the last one, driven by the financial crisis. As the stock market plummeted and economic uncertainty soars, investors flocked to the safety and the potential of gold, flocking into gold as a safe haven. And it pushed prices from around $650 in early 2007 to over $1,000 per ounce by early 2009. We have the charts to show. We cannot rely on the manipulated data, but we can rely on the trends. And in the gold market, the trend is your friend.
The number 18778 silver, the website guildhallwealth.com. Just want to take a moment to thank everyone who's been getting involved in the market and taking advantage of the dip in gold and silver this week. It wasn't such a big one, but it's always great to take a bit of advantage. So kudos to you. Thanks for joining us at Guildhall, and we love being your partner in protecting your wealth and helping you in the future, because we truly believe that gold and silver, that the best is yet to come. And every time we're looking at charts and where people see the prices going, the analysts who are much smarter than us, who have teams of people looking at combing through the actual economic data, they are coming up with some incredible numbers, and we're going to show you that in the next segment. But first, when we're looking at gold and silver, some of the fundamentals we apply are inflation. You've heard us talk a lot about that. The idea that creating money out of thin air or creating currency out of thin air is just going to mean that everything costs more. Well, you can't create gold and silver out of thin air. It takes blood, sweat, and tears to pull it out of the ground. And so there's a finite amount of it, which means that it takes advantage of that too. And so the prices of gold and silver rise. The performance outpaces the inflation over time. It's not necessarily binary. Today, inflation went up, gold went up. But over time, you can see that gold has completely outpaced inflation, and there is a floor set every year to what it costs to get it out of the ground. The other aspect that we look at is the geopolitical risk that's involved. This idea of counterparties, of sovereignty. Why are central banks holding it? Well, they want to protect against maybe having the dollar weaponized against them. They want to protect that. They want to have liquidity. They know that having gold, they can revalue gold to cover debts. There's all reasons that create a geopolitical risk that could fall on a country and why they would want to own gold. And that could be for personal reasons too, right? If I'm living in England right now and I'm concerned about a civil war, maybe I like having gold outside the banking system because they could have lockdowns tomorrow.
Yeah,
okay?
You won't even know about it. You can't even retweet that stuff.
Exactly. So you want that sovereignty. The other thing is industrial demand. Now that applies a little bit more to silver. In gold, we're looking at just supply demand. But in the silver market, there's also the industrial side of it. Now, we've talked a lot about solar, green, all of these things. Look, at the end of the day, there is just not enough silver in the world to match the ideological Green New Deal. It can't be done. But there are other inventions and other usages and other applications that silver's being used in that are going to reshape the world. And Toyota has come up with one of them. Jerry.
So this is coming from the Silver Academy. Amazing as they continually highlight the usages in the silver market, especially knowing that silver leads all asset classes so far in 2024. Up 23% in the past 6 months. So silver is in demand. The U.S. Department of Energy deploys 1,000 hydrogen fuel cell buses to establish a fuel cell hub. And what they have done, thanks to researchers at the SLAC National Accelerator Lab, Stanford University, and Toyota Research, they have made a significant breakthrough, making hydrogen fuel cells more affordable and practical. The team discovered this by substituting some of the platinum out in the fuel cell catalyst with cheaper silver, more demand for silver. They could achieve an equally effective fuel cell at a much lower cost. This innovation not only reduces the overall expense of fuel production, but it also simplifies the chemical process of applying the catalyst to the cell's electrodes. That catalyst, once again, is silver, and this is a technology that's going to help California's woke system to accelerate the clean hydrogen projects, because remember, in California, all new sales of transit buses must be zero emissions by 2030 in that state.
And the bonuses are, for example, how long does it take to charge one of these things?
Yeah, so the fuel cell energy is superior ultimately to the electric vehicles. Fuel cell electric vehicles, including cars and trucks, offer significant advantages due to their fast refueling times, zero emissions, and superior torque characteristics, so power. Unlike battery electric vehicles that can take 30 minutes to several hours to charge, and we've seen that disaster happen in California, these fuel cell electric vehicles can be refueled in about 5 minutes, comparable to conventional gas vehicles. This rapid refueling is particularly beneficial for long-haul trucking. I know me personally, when it comes to electric vehicles, if I have to go on a long haul with my kids, I'm worried. Immediately as we embark on our road trip, Jeremy, I'm looking at that charge. I'm already looking at my phone to see how much battery power I have. Imagine a vehicle. So that's out the door. This is a new technology that we're keeping an eye on. And as you mentioned, as we advance technologically, you're going to need more and more of this amazing catalyst, this element of silver.
Yeah. So, I'm not worried about whether or not we have the capability to have silver for solar power. This is more about the fact that there's always going to be new advances in technology, and silver is always going to be a part of that. And so the demand on silver is not going away, but there's not a lot coming to market. It's getting harder and harder to get this from the mine to market. The mining industry is devastated. And so what you're going to end up with is massive spikes higher for the price. And that's not going to affect these fuel cells. They're going to need them no matter what. So the dynamic, the supply-demand dynamic, is so immense for silver that it just bears repeating and reminding to be excited about the potential for where gold and silver is headed, and specifically silver as an industrial metal. It's going to be huge. John Forrest Little does an amazing job at
Silver Academy.
At Silver Academy. Definitely worth following if you want to know more about some of the usages of silver. Coming up in the next segment, we want to talk about the industrial side as well, but more on, the supply side and how that's playing out today. Forget new technologies. How much do we need for the things that we have today and what that looks like? And if you think you're excited about new fuel cells, wait till you hear what the article in Jerusalem Post talks about in terms of the demand on the metal right now today. The number 18778-SILVER, the website guildhallwealth.com. Jerry, great article. I saw that David Morgan even put it out on his X feed. He was very excited about this information that came out. Share it.
This is coming from the J Post. It blew my mind, especially just how refreshing it was, Jeremy. It does talk about the industrial demand for silver. The title, Industrial Demand Might Consume the Entire Silver Market by 2025. Experts are warning that surging industrial and military demand for silver could deplete inventories by 2025, driving price volatility and supply chain strains. Now, when I read this yesterday, I was actually having a conversation. I was in a meeting yesterday with some clients that came in, visited, purchased some more, went over their portfolio, which is up handsomely about 30%. They're loving the market. They love the silver market. They just needed some more. And I recommend silver right now. If you look at the gold market, it is back above 2,400, okay? 2430, we're approaching all-time highs. Over the last week, 1 week, silver was around $30. Today it's 27. This is your opportunity because the silver to gold ratio is hitting a high that we haven't seen since April. We're at 89 to 1. And back to the article, these experts from the Silver Institute, even Johannes Bumreuter, who is the head of Bumreuter Research, he wrote, the rapid pace of technological advancements and the global push for renewable energy and driving unprecedented demand for silver. If current trends continue, we could face a significant inventory shortfalls by 2025. And then Michael DiRienzo from the Silver Institute, he obviously talks about the regular mobile phone, digital cameras, solar, computers, iPhones, you name it. It's the second most consumed commodity after oil, and there is no substitute for silver. This metal, therefore, offers great investment prospects to both him and to us because the advancements will continue in the silver market. The article did highlight the military, which is what I was really focused on because military use is a key factor. Remember this. And when we're seeing the one market that was up during the week in the bloodbath, it was Northrop Grumman, I believe, or one of the military contractors. They were up double digits.
Lockheed Martin,
thank you. War will always be a major business. And You know, the Department of Defense showed that their budgets for silver is now around the 30 mark, that their stockpiles are being drained, and they need silver. In defense technology, the military's demand for silver is another significant contributor to the depletion of inventories. Silver's use in advanced defense systems, including weaponry, communication services, devices, and surveillance equipment, is crucial due to its superior electrical conductivity and resistance to corrosion. Aerospace. Silver is extensively used in aerospace for its reliability and efficiency in critical components. As global defense budgets expand, the military and aerospace sectors, these sectors are expected to consume increasing amounts of silver. Be excited for silver. Get the silver while you can, because there will come a point when you can't get the silver. As Keith Neumeyer talked about, this is silver unobtainium. You're not going to get your hands on it, and you're going to wish you did, because where we're headed during market bull cycles and bear cycles for stock markets and the rate cuts that are looming, if it's an emergency cut, we know what happens. The trend shows recessions always follow rate cuts. It's not a relief rally. It's going to be a relief rally for your silver holdings, where silver in 1980, all it required was 2,000 ounces to buy that home.
Absolutely. Listen, you know, in the 70s, gold goes from 35 to 850, comes back down to $350 an ounce. Well, I know something that's trading close to $30 right now, but you can't tell people it could go to $800 an ounce. Maybe it can, right? But I think right now, when I'm looking at the analysts in the market, they're saying, listen, silver needs to get back above 29. Once we get above 29, just like we were before, effectively you get back above 29. It's as though you already broke 30, and the market can quickly run from that point onwards. I've seen some numbers this week where people were talking about silver going to $35 this year. When I was looking at some charts by O'Grady out of Switzerland, man, oh man, this guy is super excited about the charts in the metals, still looking at that massive teacup and handle, saying that that has almost completed, and it's to the moon from there. And as Egon von Greyerz was talking about, going quickly to $50 silver, you know, it feels like we're here. You know, we've been talking about this for years, and we have seen $50 silver over the years. Okay, we get pushed back down. But when you combine the fundamentals of the lack of industrial supply, the usages for it, the demand for it, the fact that as gold rises, people are going to look at gold and say, well, I don't know, $4,000 an ounce is a lot of money. Maybe I'll buy silver. It's trading at 80. You start to really have those economic decisions in there as well.
Yes.
And so it starts to get really, really exciting, and you know that it's undervalued right now, and you can still get it.
Exactly.
We have seen periods where the retail market got completely wiped out. Can that happen again? Yes. Do you want to wait to see silver at $50 before you get involved? Is seeing believing? Or can you do some of the research, talk to us, you know, we'll show you the research, and maybe put a toe in the water even.
Yeah.
Right? Get prepared. Get the relationship open. Right? Maybe it's, I'm not going to put my case money in. Of course not. Maybe it's, okay, I'm not going to even get up to 10%, but I will shake a hand. I'll get some product into the market and see what this looks like.
Yeah.
And when it comes to registered accounts, you want to deal with Guildhall. We walk you through it. We partner with you. We're all about relationships. We'll show you how it's done. We're very transparent. We help keep the client comfortable and aware of everything that's going on. It's like, you know, if you're going to climb a mountain, you want to go with someone who's been up that mountain many, many, many times, you know, thousands of times. And that's what we do at Guildhall. Every day we help people get in their straps and walk up that mountain in the precious metal market. If you've missed a show, you can check us out on Rumble. You can check us out on YouTube. As you've probably heard, we're putting out some pretty decent stuff on X. You can follow us there, or give us a call and sign up for our newsletter that goes out once a week. And Jerry, any last thoughts?
You know what? When we're watching this market, it's either you convert out of paper systems, and that is the argument. As Harry Brown, permanent portfolio investment strategist, once said, when the paper money systems begin to crack, and they are cracking, And when that begins to crack at the seams, the run to gold and silver will be explosive. And I want to join you in this journey. Help us help you. Give us a call, 1-877-8-SILVER, the website guildhallwealth.com. Thanks for tuning in.
Thank you for everyone for listening, and we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.